Alright, so ladies and gents, welcome back. Alright, so I know I did start a little bit early. It is now basically 25 minutes past 1 in the afternoon. So I'm going to start setting up this trading for now. Reason being I'm going to start setting it up now is we've got news at 2:30. So this is of course the unemployment claims. We'll see how it goes at 2:30. I'm just going to start setting up a couple of things now already. I do see that the gold has started to make a move to the upside. So what I want to do is I first want to see if gold breaks through. I'm not going to put a buy order in now. Two reasons why. Number one, it has to break through there, come back for a retest and do a second run, and then I'll trade higher on that second run. I'll put a buy order in. Reason number two is if I do put a trade in now, I'm gonna have to put a very wide stop in it because with the unemployment claims, the markets are gonna move around a lot. So I don't necessarily just want to jump in and put a trade in now, although this is a good opportunity. Now it touches there, comes back and does a second run up, then wherever that turns, that will be my buy order location. So but it first has to break through this gap right over here. So we'll have to see first. Once it breaks through here, by all means I'll have a look and see how it goes. So I do have a trade in, but this is on the 6-hour time frame, so I've got a very wide stop on this one. This is the pound USD. It is at a very interesting level of support. This is a huge support level. The reason it's a huge support level is I see this gap here, this gap plus this huge big push to the upside. So I know big corporations and so forth jumped in here and they did buy here. I don't see any big significant sell-offs. That is a sell-off, yes, but I don't see, like, there's also a couple of big ones, so maybe bought there and then sold off there, sold off. But I do see that this is a huge jump. So I am sure that whatever happens with the unemployment claims will have an effect on this and hopefully push it to the upside. Otherwise it will help her to break through to below this main level of support. And believe me, it's going to need help to break through here, because that is a huge amount of buyers that are here. So it's not just going to break through. It's going to take some time. That's why I've got a buy in here. And anyways, I've got a buying going on, and if I do see a break above that and it comes back for a retest and it does a second push to the upside, then I will put another buy order in, and I will consider the change of direction towards the bullish side. So for now that was very bearish, but hopefully we'll see with the unemployment claims and we'll see how it goes from here. So yeah, I just want to do a quick run through it. The Euro USD did a massive push up to the upside, but that is because of the jobs number that came out in the US that pushed this to an extreme amount of limits and actually messed up the whole market and the stock market and all that. So everything is upside down a little bit at the moment. I know a lot of traders are busy fighting this wave because it's now, there's a shift coming in the market. So the market has moved in a direction. Now there's a little bit of a shift. So everything is a bit upside down and not flowing properly. But that has to happen to put new fresh money, liquidity, and just to revive the market again. It has to happen every now and then, that everything just breaks down and falls down, and so you can rebuild again and the markets can move again. All right, so let's see what happens. I'm expecting this one to first come down because that is a massive gap there. So it needs to come and fill this gap. This gap needs to get filled. If you look at, I can show an example of that, but just a sell-off example. Look at this massive sell-off that happened here. It is a massive one. So it left a gap. the market will always come back, almost always, not always, please don't take my word for it, but majority of the times the market will come back to fill this gap. Let me just put a thing in there so I can just show you guys what I mean. So there it left a huge gap this year, this big candle over here. So whenever the market leaves a gap like that, majority of the times it will come back to fill that gap and then move to the upside. So that's why I like to look for these abnormal long candles. With my other trading style that I use as well, that I have explained on videos, I look for these abnormal candles, and that's where I put trades in as well. But it also goes hand in hand with my trading style that I use with break of structure and so forth. So it's all intertwined and all just part of one trading style basically that I use when I trade. There's a lot of things that go on with my style of trading, and I do watch the news and I keep up with what's going on. I like to watch the volume, and I like to check for change of structure, change of characters, break of characters, break of supports, break of resistance. I use a whole array of things when I trade. All right, so let's have a look. Let's see what it is now, 1:30. So in about an hour's time from now, we should see, you should see the market start to go crazy and move and so forth. And I hope you guys that have got trades in, if you can, close them. Otherwise, move your stops very wide. Your stop losses has to be moved very wide, because I am sure that these unemployment numbers are gonna rock this whole thing at 2:30 in about an hour's time from now. So now I'm gonna put some music on for you guys, and we can keep an eye out for this. If I do see that this stays above it even after the numbers, I will definitely start looking for a buy on the gold. Now, if you do see that there is quite a substantial amount of volume in this range here, but yesterday also I told you in the video that we're going to have a ranging market. Ranging market, for those of you who don't know what a ranging market is a sideways movement. So like this is where market moves, it's fine, and then you get to a point where markets just move sideways. There's no significance. So that's called a ranging market or a sideways market. So the reason why the market is moving, or gold is moving sideways, is because everyone's waiting to see the unemployment numbers, the unemployment claims. We'll see how it goes, and hopefully we can put some trades in. From my side, have a good one. I will put some music on for you guys, and let's enjoy the show at 2:30. Hour from now, let's do that. Alright, so as we're waiting for the unemployment claims at 2 o'clock, 2:30, it will be in about 40, almost 50 minutes from now, 50 minutes from now. I want to explain how my strategy works. So this here, you would think that this is the recent swing high. How my thing works, how my strategy works is that cannot be a swing high, so you can't base your next move upon that as a swing high. To me, in order for this to be a swing high, the lower must have been lower than the previous low, so you must have had a new low, then that would have been classified as the new swing high point. So the swing high point here is this one here, because this one broke lower, made a new lower. So that here, where this big red line is here, that is, in my sense, the swing high. Let me just take that away there. Well, don't delete it, let's move it away. So that there is the recent swing high. So in order for me to start looking at the gold as a buy, as a bullish movement, or for me to start buying gold, I need to see this broken. I need to see a movement past that is counts as one move. Then I need to see some sort of a back trace, and then I need to see a second move also above that swing high there. Once that happens, then I will look for my entry point and put my entry point in as a buy. So until that doesn't happen, I can't class this as a swing high or the latest swing high, because the low didn't go lower, didn't form a new low. So to me, that is not a entry point. That is just messing about. It can still go down from there. So I'm waiting for gold to break through this line, then come back, and then make a second move, and then and then once that second move comes back, it will pick up my point of entry and take me to the upside. So basically, let me explain it here as well, because I do see that people don't understand completely. So this here is classified. Let me just move this all away here so you guys can see, and I'm going to use this method over here. So if you look at this is classified as the last swing high right over there, because it did form a new low over there. So that is my recent swing high right over there. So I was waiting for gold to break through that there, right through that one. It did break through, came back for a retest, and did a second move to the upside. So now I will put my buy right in there by that one. That's where on the tippity top I will put a pre-order in, a pre-buy, and my stop loss will be right below that swing low there, before it made the jump to the upside. That swing low there, my stop loss will be right below that. That will be my stop loss. And then from here, I will just follow through with every swing high, swing low. All right, so that one there broke through, made a new higher high. So that is, so I'll take my stop loss then and move it to there. Once I see another breakthrough of the new high, there, okay, there's a new high there that formed. It went past that. So this is considered my new low. Here we see it came down, didn't make a new high. It's exactly the same point, so that is not where I would say is your new swing low. And then it started, and there, with that one there, is where it broke that high. So that I consider as my new point, where I will definitely be putting my stop loss, which is now in profit. So there we go, we got a new high over there, we got a low, and price shot up to the upside. It broke that one, so I would have moved this one to there, and that would have been my new low. All right, my new swing low. Now I see, look, it comes, it took me out for a profit right over there. But now I know where my latest swing low is there. So price broke through that, which means we are now heading towards an up, towards a downtrend, towards a bearish movement. So I'm looking for a selling opportunity. So what am I looking for? That was the breaking candle. It broke through. But that was also why it is so extreme, is because of the news that broke in the US, the job claims, and not the job claims, yeah, the new jobs and all that. So a lot of news came out which was bad in the US. Stock market came crashing down. So that's why we've got all these extreme movements, but it still remains the same. That one broke through. Now I'm waiting for a second move. So it came back to the upside, came back down. There's your second move over there. But what I see, what happened here, is it would have taken me out for a loss, a big loss, if I work it that way. But I won't trade. If the movements are so severe, I don't put in trades. I like smooth, nice movements. These erratical movements, I do a different kind of trading style with that. This is where I see these extreme downs, is where I look for gaps, because it leaves gaps. So that is where my other trading style comes in. That's why I mix up the two. So when I see an extreme candle like this, I know that the market is more than likely to come back and fill that gap. So this method of trading is now out the door. I won't use this method of trading, of breaking through. I know it broke to the downside, so there's no doubts in my mind. Sellers climbed in there, you can see that. So usually I would put in the middle of this big candle. You can go in closer if you want to. If you want to, you can go much closer, and you can use a Fibonacci if you want to. Also, you can put the fib there on the start of that to the bottom of that candle. Just the body, not the wicks, just the body. And at the halfway point, you can put your sell order in there. That's where I would put my sell order, at a halfway point, and my stop loss will be above the 75, which is there. Between the 75 and 100, that would be my stop loss over there. And then the same thing applies. And then you just go with where the new low is or the new high is. Let me just get rid of that Fibonacci, thank you. So then that goes a little bit different. Once I start seeing, these massive candles, then I trade a different style. I've got two styles that I use when I trade, and I look for massive candles like this as well. So yeah, you can see the same. So it would have picked up my trade there and go all the way down, because I'm looking for, that is then the next high point. So where I took my trade is the next high point. Now I'm looking for the next high, basically the next swing high. It comes up, and there it formed a new low. Remember, these are just, now I do know that that will be my next high, my next swing high point will be there. Reason being, another radical movement. So I do the same thing. Let me just go there quickly. I just want to show you quickly. So what I'll do with this one is exactly the same. I'll put my Fibonacci there at the start of this. These are three candles. These three candles right over here. So put my fib there into that candle. See here, I probably would have been taken out, but I didn't jump into the trade. Yeah, I'm already in the trade. So I would wait for this to go to the next level as well. So how can I explain this? I need to explain it properly. So with these erratical movements like this, you can actually take it from there, basically, actually from that one. So there's the start of this. It's just down candles. So you would do exactly the same here. And if it does go past that, by all means, okay, then I know I'm probably out the trade. But this would be my new swing high, because I know it will turn, and somewhere in the middle of this big movement over here, which is there on the 75. So not too worried about that. So now the radical movement stops. So this will be where I place my stop loss. That will be my next stop loss placement right over there, because this is my swing high. Okay, so now this radical movement is past. Now we can start trading the way that I normally trade. So now you can look for movements again. So this is low there. Now this is a new swing low. What I'm looking for is to classify this one is a new lower high. It needs to go lower than this point over there. So there we go. It's lower than this point. So you move your stop loss, so you take profit to that point right over there. Now we do have that. We've got a new low over there. 100% fine. I do see it went up and created a new low lower than this point over here. So we've got a new place to move your stop loss right over there. So this is where your stop loss will be. Now I see that we've got some, I would have looked in the market like yesterday and I would have told you we're going to see a lot of sideways movement. So that is basically what would have happened. So you would have had all this from there to there. That is a nice 5,578 points. That is a 2% increase, which is absolutely enormous, So now I do know that that is my previous high over there, because that's the low. It hasn't formed a new low as yet. This one is not a new, it's not a new low. I can't see that as a low. I can't see that as a low because it's basically the same. It didn't form a new low. Nope. So the recent one is still this little one over here, but that is a very small movement. So I would use this as a anchor point for my next move when I try to go to the upside. Now I'm looking for buying opportunities. Unless this starts to turn and forms a new low, then by all means I will start looking for some selling opportunities. But I'm leaning towards the buy, especially if the numbers come out today negative for the USD. We will definitely be seeing some buying pressure coming in here, and I will be looking for some buying opportunities to move towards the upside again. But yeah, that's it for me. I'm gonna put some music on. Let's just wait for 2:30. So it's basically 8 minutes to 2 o'clock. So we're waiting for 38 minutes, and then hey, the fun is gonna start at yeah, then the fun's gonna start. Okay, so for now I'm waiting for gold to break through, come back, do a second run, and then on the second run I'll do my trading. Unless it forms a abnormal long candle, then I will look for the half of that, for the middle of the candle, put in a buy order, sell below there, right over there, and then do it like this, like that style of trading. So I use two styles basically, if I can explain it. Anyways, let's wait for that time to come. I cannot wait. Alrighty then, ladies and gents, the time is coming. There's 3 minutes, well, less than 3 minutes left to see what is happening with this numbers. I am so excited to see this, and I think we're going to see some big movements in the markets. So just remember, if the actual is higher than the forecast, or even higher than the previous amount, which is 249,000, that is bad for the US dollar. That means that the gold should push up to the upside, and any other forex pairs or anything that's paired up with the gold or with the US dollar or tied up to the US dollar is going to have a negative effect on the US dollar, but it's going to have a positive effect on that. So which means if you have a Euro USD trade, you will start to look for some buying opportunities, because that will mean that the market should move up to the upside for the euro, and a weakening of the US dollar, which means the DXY should go down a little bit. Yeah, as soon as I get this connector for my external screen, my second screen, I will have the DXY up as well, so we can have a look. But it's now 1 minute, and let's see what the actual is. 1.5 minutes. You're going to start seeing a lot of movement, you know, like rapid up and down movement and so forth. So let's wait for all that to calm down, for the chips to fall where it needs to fall, and then we'll make a move from there on. After the market has calmed down, we'll see what is going to happen. But if the actual is lower than forecasted, then that would mean it is good for the US dollar. So which means all the pairs, it should affect the gold a little bit if it's lower, because then we might see the gold move much lower than it is now. Alright, so let's see what happens. You're going to start seeing some movement in the market any second now. So let's just see what the numbers are. Alright, 5 seconds. You're gonna start seeing. Let's see what happens, and the actual is. Come, show us something, And you're gonna see this market jump and going crazy. $233. All right, so that's good for the US dollar. 233,000. It's lower than the forecast, so which means we will see. If we go back to the euro quickly, I just want to go to the euro. 233. So let me jump to the euro USD. We should see nice coming down. The pound USD, that should be coming down now as well. That's at least good for the dollar. That's at least. Sure, at least a good thing for the dollar, which is good. All right, so we'll see that the US yen should be spiking to the upside now, but I'm waiting for it to break through there, for my strategy to work, for my rules and how I do my things. That is the previous high over there, so I'm gonna wait for this to break through there, come back, do a second move, and then only I will jump in for the buy on this one. So I'm just gonna do. I don't use these flipping. I use no indicators at all. Okay, so we'd see the gold maybe falling down to the downside, and my pound USD is also gonna move down now. 233. So that's quite good. That's really good for the dollar. 233,000. It's lower than forecasted. Fantastic. I like it. Okay, I just want to see what the next news is. Friday, we've got a public holiday here in South Africa tomorrow. Canadian unemployment change, and that's a Canadian dollar. So Monday, let's see if there's anything important. Nope, it's just the pound that I'm in. Yeah, that should be quite a nice one. Oh, okay. So I see Tuesday. Our next big appointment will be Tuesday at 2:30 the same time. It will be the core PPI and the PPI month on month. So that is also going to absolutely shake the market as well. It's going to make movement in the market. I like it. I like it. I like it. I like what I'm seeing. So with the gold, we saw double bottom over there. That's quite a nice one there. Nice double bottom pattern. So let's hope and see. I'm just going to wait for this gold to break through and then come back for a retest, and then I might look for a buying opportunity on the gold. What else have I got going for me there? Okay, so this pound USD with the US dollar going good, I could actually see why. We're going to have a downfall over here. Okay, gold. Let's wait for that breakthrough. Didn't move the markets too much. I expected a lot more movement in the markets. I expected a lot more movement. Interesting. Very, very interesting. But if the unemployment claims were higher, I think then we would have seen a lot of movement in the market. But for now, interesting. Interesting, interesting, interesting. I like it. So we're done with that. Yeah, ladies and gents, I do put this here so that people that are joining the video can also see that this is a demo account, so I don't get people sending me messages, oh, are you trading on a demo account? Yes, I am trading on a demo account because I'm busy testing out a new strategy here. So that's why there is a thing called a demo account, so you can test things on. I know a lot of people don't use demo accounts, and that's the dumbest thing you can do. If you've got a strategy that you want to test, or something new you want to try, do it on a demo account first. Yeah. So back testing the strategy of mine, yeah, it works nicely, but there's no better testing than real life testing to see how it works. So we do see, I'm just waiting for gold to break through here. Let me do a little bit of a thing here. What I want is gold to break through, and then I wanted to come back, and then I wanted to do a second pull to the upside, and once it does that, I will put my trading in here. I will put a buy order. Let me just change the color of this one. So this is where I'll put a buy order in. I will write it all down nicely now. That's where I'll put a buy order in, because then it should come back from there and smack the buy order. Let me just change this color to green again, to red. Yeah, so that's basically what I'm looking for, and then it should probably pick up my trade, my thing there. And then hopefully from there move to the upside. That's basically what I'm looking for here. Let me just put them all there. So there. So that's basically what I'm looking for when it comes to the gold. Only when it breaks through and it does a second run, I will put my buy order above that initial high of the breakthrough. So if I can just put it in plain terms, That's what I'm looking for. But anyways, it might take us a while, but let's see how it goes. If you guys some music, I was actually, this is disappointment. I was looking for some more movement in the market. I was, amping myself up for some more movement, and then it's like, no, nothing. Oh man. All right. Anyways, I'll probably be live for a couple more minutes, and then I'm gonna go off, and then I will see you guys again tomorrow morning at 8 o'clock. I will start my live session at 8 o'clock tomorrow morning again, and let's see if this happened or is busy happening. For my side, Winston could see her, but first I got someone here that wants to say something to everyone. Okay, stay nicely. What do you want to say to them?
Like and subscribe to Winston Smile, please.
Mr. Forex Trading.
Mr. Forex Trading.
Shop. Kids. Like and subscribe. My side, have a good one. See you guys again. Cheers.